Now I reach the third part of financial statement analysis. In part 2, we ended with the debt and solvency ratios. So here in this video, we're going to start off with an activity. Here you can see the 2010 values for total liabilities and total equity of a company, with total liabilities and equity amounting to 10,618 pesos. And what we have to do would be to compute for the debt ratio, equity ratio, and debt to equity ratio. Okay, now the formula for debt ratio is total liabilities divided by total assets. We don't see any total assets here, but since you already know the accounting equation, total assets equals total liabilities plus total equity. We have total liabilities and equity here, so that means your total assets would also be equal to this amount. Now we are ready to compute. Let me just pull out my calculator. Okay, ta-da! And to compute for debt ratio, we look at the peso value of your total liabilities, total debt, divided by your total assets or total liabilities and equity, 10,618. Convert it into a percentage times 100. Okay. That'll mean that this company is funded by debt. About 56.46% of your total assets would be funded by debt. We can actually determine the equity ratio now that we've determine the debt ratio. If you remember, it was 56.46%. Okay, we can actually subtract, or let's just remember this number. So 100% minus 56.46. This means that the equity ratio would be 43.54, meaning that 43.54% of the total assets would be funded by equity. But if you don't believe me, then we can actually go ahead with the formula of the equity ratio. 4,623 divided by total assets or total liabilities of equity, 10,618 times 100 to convert into a percentage, and voila, 43.54% of total assets is funded by your equity. So if you want to rewind a bit, you can compare this value and the value that we got earlier, and I assure you they're equal. So that's just a trick. We proceed with debt to equity ratio. Now, how do we do this? We simply compare the total liabilities or total debt with total equity. So 5,995 divided by 4,623. Okay. We don't convert into a percentage. We take it as a decimal value. You can see here that's 1.30. If you have a value higher than 1, then it means that the company is funded more by debt. And we can double check with our data here. And as we can see, indeed, we have a higher value for total liabilities. Now we proceed with profitability ratios, the last set of ratios in the financial statement analysis. First, we have gross profit margin. And the label for this one would be percentage. That's just gross profit divided by sales. I hope you still remember what gross profit is. This can be computed by net sales minus cost of goods sold. You get gross profit. So instead of having the peso value, we convert that peso value into a percentage to see how much we get from the sales and after considering the cost of goods sold. Next would be net profit margin. So that's net income after taxes divided by sales. If you want to convert into a percentage, remember to multiply by 100 in all of the cases. So in this case, instead of looking at the gross profit, we are looking at the bottom line figure, the very last figure that we can see in the income statement. But instead of expressing that in peso values, we are talking about percentages. So hopefully there's still something left after we've deducted all the expenses from the revenues or sales. And before I move forward, obviously for net profit margin, hopefully it's a high value. I mean, it's a high percentage, because otherwise maybe, let's say if you get 2%, then maybe it could indicate you're not earning as much. For return on investment, in other textbooks, this is called return on total assets. This is also a percentage, expressed in a percentage. So net income after taxes divided by total assets, multiply 100 so that we can get the percentage value. And we will be able to see how effective the management was able to generate profits given its assets. Return on equity can be computed by dividing net income after taxes, or this is the very final value in your income statement, divided by stockholders' equity, or equity. And then if you want to convert into a percentage, multiply this by 100. So this measures the return earned on the owner's investment in the firm. So just a quick tip here. Let's say if you have a ratio or a profitability ratio that has the word return in the beginning, let's say return on investment, or in this case, return on equity, notice that the numerator would always be net income after taxes. Just a tip, since in the long test, you don't or you cannot bring a cheat sheet. So you have to memorize all of the formulas before the long test. Okay. Next, profitability ratio would be earnings per share. I hope this is you can still remember your corporations lesson, but essentially what we're looking at is the earnings available for the common stockholders and then divided by the number of shares of common stock outstanding. Now, if you were the investor, if you were to compute the earnings per share, then what you would see is for every share that you own, how much money do you actually get or do you actually earn? Next would be price to earnings ratio. This would be the market price per share of the common stock divided by the earnings per share. What we are looking at would be the market price vis-a-vis the earnings per share of the common stockholder. Next would be the dividend yield. And what we want to see is the rate of return in the investor's common stock investment. So given the cash dividend per share and then divided by the market price of the per share of the common stock, you'll be able to get the dividend yield. Okay, so just to clarify, market price can be seen in the stock market, in the news about the stock market. So you can actually check out the Philippine Stock Exchange, look at the price of that certain stock at a given date, and there you have it. You will have the market price per share common stock. Okay, finally, the dividend payout ratio. This measures the total earnings distributed to stockholders through dividends. And when you say dividends, this pertains to cash dividends. So what we can do is divide the dividend per share of common stock by the earnings per share. And there you have it. This ends the financial statement analysis chapter. Now, what are you supposed to do? 1, answer your homework. 2, try if you can actually compute for the respective ratios being asked for in your workbook. And so that's it. Till the next video. Bye-bye.